What's up, everybody? Good morning. Good morning. What's going on with everybody? Everything good? It's what a week, eh? I tell you, it was crazy. And for those of you who don't know, this is just a pregame. I'm not starting officially until noon, but I always like to come in and give a little bit of market commentary ahead of time. It's just kind of the way I do things. I always want to be able to share with everybody what I'm thinking, what I'm seeing, and I love educating. So, look, and I'll have a partner in here today. We're doing this with Ninjacators, so he'll be here shortly, and he's going to join me in the pregame, which nobody else does this in the industry but me. But anyways, look, it was a crazy week, but at the end, where do we go, right? I mean, basically, when it was all said and done, it wasn't that big of a down or up week. It was actually down, but not dramatically so. And if you look at a weekly chart, pretty much, fairly flat for the week. But we did test the old lows or made new lows in some indexes. So we'll see. Again, I think we're in certainly a bear market. I think we're in. We've got issues to deal with. I mean, there's a lot. We don't trade news, but there are a lot of things in the economy that suggest that there's a lot of problems. Okay, not to mention the senseless war in Russia, but the sanctions, the problems here, the potential food shortages, the high fuel costs, the high food costs that are coming if they're not already in your neighborhood, the empty shelves in the stores that you go to. I mean, there's a lot of things that just ain't right, and unfortunately, most of them are for no reason. Okay, I think the biggest problem is most of these issues are for no reason. Okay, if the United States would have never stopped fracking, okay, and shale producing, then there would be no troubles in the world. Okay, there would be no problems in the world. Okay, we would have low. I mean, there are obviously going to be problems, but we would have low oil costs. We would have not having anywhere near the inflation that we have. We might not have negative interest rates, even though they're showing that they continue to go higher. But basically, the interest rates our nominal rates are negative, which is just subtract the CPI from the 10-year, and that tells you the actual interest rate. And that's the amount of money that you're losing because your wages aren't keeping up with the inflation. Is no matter how much more you've made, they aren't up enough to keep up with the ever rising costs of goods and services around us. And I think that becomes a problem as well. Now, again, you can say I'm full of crap. But hey, listen, you won't be the first one who says that, but I'm giving you it straight, exactly how I see it and what I think and how I trade it. But when you look at the markets, now this is interesting. On Monday night, I do a strategy call, as many as you know, and I said that I assumed that the S&P had a range of 4,100 to 4,300. Okay, and this is Monday here. Okay, right there. Okay, and I said, I would look to be a seller at 4,200 first, but if I wanted to be a little bit more conservative, I would wait to see if 4,300 showed, and I would definitely be a seller at 4,300. And where was the top of the market? 4,303. Okay. Now again, we were already short going in, so it wasn't that, but it was again understanding and reading the market as it goes. And that's one of the things you want to understand is how the market phases, how they work, and what to expect. We cannot predict. We can expect based on certain things, right? So, and it's learning about the expectations. Okay. So if you fast forward a couple of days, you go to Wednesday, and we had, the markets were down. They looked very ugly Wednesday. What's up? Do we get there, boy? Markets were up. We're down Wednesday. In fact, early Wednesday morning, I think the NASDAQ was down about 300. Okay. And by the end of the day, it was up about 600. Okay. Now, what happened? What dramatically changed in the middle of the day? Well, I could make a case for that the Fed made their announcement and that it was exactly as they expected. Okay. They said they're going to raise 50 basis points. Now, I know some thought that they would maybe go to 25 because of the negative GDP print. And then there was talk that they may go to 75 basis points, which would have been fairly negative. And what, in my opinion, what happened is the street got short, and everybody was short going into the announcement. And the announcement came out, and the first initial reaction of the market was down a little bit. Now, we were trading it live, our futures class during that, but the first was down a little bit, but suddenly it stopped going down. So suddenly, what did you have? You had a whole bunch of shorts. They don't look at each other anymore because we're all electronic. But when we're on the trading floor, which I'm from, everybody's looking at each other. Well, wait a second, it should be going lower, and it's not. Uh-oh, I better cover. And of course, you got the short squeeze rally, okay, to follow that. And of course, we had the explosion Wednesday, which took us right to the top end of the range, which made it easy to be a seller on Thursday. Okay. And of course, Friday, we broke down and came back above and closed right on maybe some support. But in my eyes, we're going a lot lower. In my eyes, we're going to see a major sell-off that's coming. I think we're going to see an extended trend to the downside. But remember, okay, bear markets produce the most beautiful, exquisite rallies because they're fast, they're big, they're sharp. But really, what are those rallies? They're nothing more than just another selling opportunity, okay? Because you get all kinds of short squeezes throughout a bear market. So they create bigger stuff. And if you take yourself back to 2009, 2008, we had days that we would come in to work, the market would be up 1,000 on the opening, and by the end of the day, it was down on a day. And in fact, I'd love to tell the story, and many of you haven't heard, so I'll tell it again. But I was going in for surgery, and I was really short, okay? And as I looked at my phone, I said, do I cover? Okay, the Dow was up, I think, 1,200. I said, do I cover, or do I, I said, maybe I won't wake up. And I said, hell with it. And of course, by the time I got out of surgery, the market was down. Okay, and that's that right now. If you're looking at things, you'd like to be a seller of rallies if you're carrying positions for more than a day or two. Okay, but again, you cannot do that without at least some defense that ties in. Everything we do has a defensive trigger to take us out. Okay, should we be wrong? Because again, we're not always going to be right. We have to make sure. But again, the clues are there when you look at the market. And if you understand that the most solid trends in markets go not at a 90-degree angle or a 180, they go at about a 45-degree angle. Okay. So as you look at this market right here, okay, if this is 45 degrees, then even if we rallied some, okay, it would not change the trend. Okay. Now, my expectations is we're going to work around this bottom a little bit. We'll see some pops. Okay. But I think we're going to consolidate for a week or two before the real before the next acceleration shows up. Okay. And again, remember, this consolidation band is 200 S&P points wide. Okay. Which is the same as 2,000 Dow points wide. Okay. Another big tip that the things that I watch, the Dow itself, the Dow future, Yankee Michael, they haven't been under quite as much pressure as the S&P future, which is also a bearish sign. Typically, and again, nothing is 100%, so I don't ever want to think that I'm giving you a 100% guarantee, but typically, okay, what will happen, okay, is the Dow will underperform the rest of the markets on the way up, because even though it's basically an antiquated average, and if it probably wasn't the original, it wouldn't even exist anymore. My buddy's here. Are you in, big boy?
I am. I'm
All
here.
right.
How you guys doing?
What's up? This is Craig Hill, and of course he's from Ninjacators, and he's going to be sharing some stuff with you today as well. And him and I are going to talk markets for a little bit while in our little bit of a pregame. This is new for him. Nobody's used to doing this, but like I said, I do it anyways because listen, what better is to do than talk markets? Especially look at today. We got baseball, basketball playoffs, hockey playoffs, and
Yeah.
the Kentucky Derby. How about that? I mean, what could be better than that? And of course, I bet on everything, but I'm betting on the Derby, and I'm taking the worst of it. But again, that's not trading. I would never take the worst of it intentionally in trading. In horse racing, I know I'm taking it, and I'm taking a post position that hasn't won since 1985. Okay, the one post. But anyways, what's up, brother?
Not much. How you doing?
Doing good. I'm just talking about how the markets function, how they work, and that we talked about some of this stuff on Monday night, and everything went to our resistance levels. And I was just explaining to everybody that the Dow is, although it should be eliminated, but it's not. They keep putting new stocks, right? They keep changing it. It should be now the Dow Jones Industrial Technical average. But either way, what happens is when the markets are really strong, the Dow will well underperform the S&P. And when the markets are really weak, the Dow will overperform and not do as badly. And again, the perfect example is if you look right now, if you look at a Dow future, the mini future, which is worth $165,000 right now. Okay, for one contract, it would be 165,000 in cash, and the S&P is worth, let's say, 210,000 right now. Okay, so there's about a $45,000 spread between the two. Okay, now just to put it in perspective, in 2009, at the bottom of the market, they had inverted. The Dow was worth more than the S&P. Okay, but that trades like a rubber band. I actually trade that, so I can talk very much to that. But it trades like a rubber band as it goes up and down. The spreads narrow and widen. But we were just out. At the highs of the market, that spread was at about 240. So it's already come back in about 25,000. And I am not saying it's going to invert again, but it's a real possibility. And if the bear market exists and continues, which I do personally believe it's going to, then it's going to continue to shrink. And I will trade that, as I always do. I mean, I trade both sides. Again, I don't pick a side. I trade the expansion of the rubber band. When the rubber band gets too stretched out, too far, too wide, then I'm going to go ahead and buy the Dow and sell the S&P, and vice versa. And again, but you have to be also willing to add to that position. Okay, if you trade that, because again, you're not gonna nail the exact every time. So you start with a smaller position and you build it for when it does actually go your way. But the markets themselves, Craig, I said I think the markets are in trouble. What do you think?
Yeah, I mean, ever since the number of stocks in the S&P or even the Nasdaq, they went. You got more than 50% above their 200-day average. I thought we were going to get the correction like back in February, but we ended up with just going sideways a little bit. I thought we'd see more of a correction, earlier this year.
Well, I don't disagree. I mean, I've said it for a while. I think one of the things we have to remember is that the stock market is really not necessarily a bellwether of the economy or anything else at the beginning. It's a place where money was being treated best. Remember, when the 10-year was at 1.7, fixed income was not a very attractive spot. They were forcing many of the people that don't ever want to be in the stock market. There's a lot of people that don't like the stock market because they feel it's too risky. Certainly, if you were someone who was getting ready to retire, or you were older and you didn't want to take that kind of risk, then they teach you. Now, I don't say that I necessarily agree with these methods, but at the end of the day, they teach you to have more fixed income the older you get. But of course, fixed income was paying nothing. Passbook rates were paying zero, basically, 1%. And the only way that anybody get returned, because if you're someone who is going to retire, okay, and you worked your whole life and you put away, let's just say 500,000. Again, whatever the numbers doesn't matter, but let's say it's 500,000, and you're making X amount of dollars per year, and you figured, well, when I retire, I get my 500,000, which should earn, let's say 5%. I'm not even going to say 10. Let's say it should earn 5%. Okay, which is $25,000 a year. And I'm going to get Social Security for another $25,000 or $30,000 a year, which basically almost matches my income. Okay, then I shouldn't have to touch my principal. Okay, but what happened was when the fixed income markets, when the interest rates collapsed, that took away a lot of the safety income for some of these folks. So they were forced unwillingly, but had to go into the stock market because at the time they called it TNET. There is no alternative, which is what propelled, but the big question always was the market going higher because it should be going higher, or is the market going higher because they kept adding to the money supply? Okay. And there was no place else to go. And I would make the case that it was more or less artificial cash that was being put in propelling the market. But again, that doesn't matter, right? You don't fight that. We were along a lot through that. You don't fight what the market is telling you, but it may not always be logical. But at the end of the day, the market is always right. Okay, because that's where they mark your positions. And if you have less money, then you lost money for the day. It's pretty much that simple when you think about it, right, Craig?
Yep, totally. Yep.
So, at the end of the day, but I do think there's a clear path now to start to see some heavy selling. You've got the 10-year, which is up massively now in percentage basis to where it was. And unfortunately, well, I mean, I don't think it's unfortunate. I think it's good, but it's going a lot higher. You see, the problem we have is the 10-year is 3.043 right now. And I think it's probably going to 5%. Now, that will do a lot of damage to the housing market because, of course, Americans, being the society that we are, we believe in month to month, right? How much is my payment? I don't care about anything else. Tell me what my payment is, right? As we buy cars that way, we do everything the same way. How much is the payment? Okay. And at the end of the day, okay, they could afford it because they could get a bigger house because the payments were less. So all of a sudden, and I can speak from personal experience. Okay. I have two homes. I live in Chicago and I live in Vegas. Okay. I'm in Chicago this week, but I just bought a home for my son that he's going to buy for me, but obviously he couldn't afford all of it right away, but we went and got him a mortgage. Okay. And I squawked at 4.25, okay, for a 30-year. We took a 15 at 3.25, but I squawked at 4.25. Well, guess what rates are today? They're like 5.25, 5.5. And that was just 2 weeks ago. So again, that makes the house worth less because people can't afford to make the payments. And this is, again, we're seeing a lot of repeat of what happened in 2008. What's up there, brother? Listen, I don't want you to get panicked, and I'm not a doomsdayer or a fear. I'm not going to make these ridiculous statements of things that'll never happen. But because I've been doing this for a long time, because I was a floor trader, I do understand, and I can see the price action is not good. Okay, it is not bullish, and I can see no reasons why suddenly things are going to get better. In fact, I can make a lot of cases for things to get worse. And I believe personally that the Shanghai or the China shutdown is not because there's COVID. I think it's because they want to penalize the United States. Okay. And, of course, the United States is threatening some sanctions. And of course, China's got a backdoor plan, which would be a lot of problems for us because unfortunately, if you're going to make sanctions against like Russia, they keep telling you that Russia is in default. That is false. Russia is actually prospering because until you bring their key assets and make them lose a lot of value, which we are unwilling to do at this time, which is simply by pumping oil, because Russia supplies Germany and the UK with natural gas. Now, natural gas here is $8. They're about $40 in the UK and in Germany. So Russia is forcing them to pay for it in rubles. If you look at the ruble, it is doubled in value. Okay, it is screaming higher. They have a lot of partnerships with China, you're seeing many people that looked at the dollar as the reserve currency no longer necessarily recognizing that. So those are a lot of potential issues that could create some opportunities that would push these markets even lower. Okay. And my personal opinion is that the haircut will be, before it's all said and done, 40 to 60%. Okay. Now, I know it's a big number, but really that just takes us back to the COVID days. That's where we were in COVID, and markets have a tendency to check levels that they were at and escape too quickly from. I'm not going to say it's going to happen. I'm certainly not going to tell you when it's going to happen because I don't know. That would be, if I told you when, I'd be a fool. Okay. I'm not going to fight the trend of how markets work. I'm not going to fight the market. Okay. I'm willing to play it either side. And, the shorter the time frame that I'm going to trade, the more willing I am to play at both sides. Like every morning at the opening, 9:30 Eastern, my members and me, we trade futures live for an hour. Okay. It's been very quiet. So we've had very few trades recently, but we'll trade either side. We don't care. Okay. Long-term positions, we're pretty short right now. But again, I would change if I had to. We're using a similar algorithm to the one we use in our day trader's dream. So, I'd be willing to change. If I have to reverse and go long, I will. Not that I want to, but again, I'm not going to use my opinion on anything. I can talk about my opinion. I do a lot of TV work. I do a lot of spots. So I can express my opinion, but I will also make it clear that just because I have an opinion of what may happen down the road, it doesn't mean that it's going to happen today. And I don't want anybody ever believe that anything anybody ever tells you is going to happen today, because that is not the way markets work. And Craig, you've been doing this for about 16 years. What do you think?
Yeah, everything you're saying, I'm totally agreeing. I mean, I totally agree with it's all this.
Sick.
Yeah,
You're a sick man. You agree with me.
huh?
You're a sick man for agreeing with me.
Well, it's true. So
It's true. Right. No, I mean, again, you have to understand that markets run in cycles too. How nobody knows the exact length, nobody knows when. But if you look at history, and you've heard the quote, right? Those who fail to recognize history are doomed to repeat it, or something in those words. Okay, that's why history is so important, because history creates the footprint that kind of projects to what can be next, and that's pretty much everywhere. If you ever thought about it, we look at charts for stocks, right? And everybody looks at charts. If you're trying to use some kind of indicator, which are all garbage, but for the stuff you see stock, because you have to know what you're doing and how to use them. But I think when you look at it with an open, logical mind, remember, grocery stores, retail stores, everybody uses a charting system, because the charting system that you use when you learn how to recognize properly leaves a footprint, which helps you project forward. Why do you think that the department stores usually, now this year, I think they're going to have some problems this year, because I think there's a big problem with the supply chain. But why do you think that grocery stores or department stores are fully stocked when it comes time to the Christmas season? Because they know they're going to be busy. They have a track record, a history of the past, which is a footprint to the future that helps them. It's the same thing in the stock market. Okay. When you look at it, okay. And, Ninjacators, they got some great indicators that they teach you how to use properly, because again, just because I say this is a perfect indicator, well, if you don't know how to use it, it's not a perfect indicator. Okay. That's the point. Okay. You have to understand how everything has a way that it gets used, and you have to put everything into a perspective, okay, as to using it properly, which means that sometimes you're going to be wrong and you're going to have to get out and take your loss and move on. You cannot force a market to do what you want it to do. You have to let the market dictate to you the terms of what you're going to do. And that's what they call the footprint that the market leaves. And again, the market left a beautiful footprint here, okay, because we can see clearly major support and major resistance are firmly deciphered right here. They're given to you right in front of your face. And I can make a case that this was better support here, okay? But overall, we know based on history that this down here at 33,350 is really solid. When that breaks, God knows where it's going to go from there, but you have basically a pretty severe downtrend, okay, that is making basically higher lows on the way down. You had one false breakout in here, and we continue to go lower. Okay, so obviously, until this changes, okay, your position should be looking for opportunities to short the market. I'm sure many of you have heard the terms double tops and double bottoms. Okay, they're fine. They're the double tops and double bottoms are great, except if you don't know how to use them, they're not so great. Okay. Anybody know why? And just out of curiosity, again, I'd like to be a little interactive too. If anybody wants to take a stab at it, why? I mean, I'm going to share it with you either way, but I love when people try to interact, and it's always fun to, because what I'm really trying to do is I'm trying to teach you more so that you have more ammo to deal with and you're better equipped so that you don't get shocked or shaken when markets do certain things. Okay. Well, all right, go ahead, Craig.
I was just going to say it's you were talking about market cycles and the footprint and everything, and that's what kind of gives the market a predictability. I mean, you're never going to be perfect in timing it, like you said, but that market cycle and the patterns that you're seeing on the chart, that's what gives it a predictability in some sense.
Okay, so I got one answer. One person participated. Look at the volume. Okay, but really, what you're looking for is double tops work best in a market that is trending lower. In other words, what it's saying to you is you want to be a seller of rallies, and the place you would look for. So if I was looking at this chart right now, and I was looking for a spot to sell, okay, I could look here, which is obviously right there now. It's very aggressive, but certainly I could take a stab there if I wanted. Okay, let's say 38.9. Okay, or the real double top based on this chart and based on this pattern would be up at about 34,000. Now, 1,200 points sounds like a big move, but really, if you break it back down to a percentage basis, is it really that big? No, it's not. Okay, it's 3%, 4%. That's not that big of a move. We get too enthralled with the number 1,200 points. Oh my God, that was down, but that's only 3.5%, 4%. Okay, it's not like and I stood in the pit in 1987. Okay, the market was down 26%. Now there's a down move. Okay, 3-4% is nothing. And I think if you think to yourself, the 11 o'clock Wednesday start. No, this is for those of you who don't know, I say this a number of times before we get started. We're going to get started in 20 minutes or so. I always do a pregame before almost any call I do. Okay. It started one day and everybody was there and ready to go. So I figured I'll take the time to educate people on things to look for in markets. You did not miss anything yet. I haven't said a thing yet. Okay. Other than what's going on. 4 up attempts, same tight area. Maybe it could punch through. Again, listen, I'm not going to tell you it's not going to punch through. I'm going to tell you that the odds favor it breaking down. Okay. The odds favor that resistance level will hold because the trend, the long-term trend is down. Okay. Now, again, that can change, but right now the trend is lower. We're going to have to do a lot of work to change the trend to get it to go back up. And I don't ever say it's impossible that it cannot go back up. I want you to understand. Okay. What I'm teaching you works at a high probability, but there is no guarantees of anything, as Craig just told you. Okay. There's no guarantees in life. Okay. But if you become, insurance agents and you buy an insurance policy, they send it out to an actuarial firm because they're going to give you the statistics based on all the things that involve you smoke, you do this, you do that, you're overweight. Your insurance is going to be $1,000 a month. Same guy doesn't smoke, in perfect shape, his rate's going to be half. So there's things that again, it's only probability. We cannot ever know to a certainty of what's going to happen in a given moment. Okay. But certainly the news and the pundits think they can tell you the exact thing, which is why I don't watch the news. I haven't watched the news, even though I'm on the news 4 times a week. Okay. Whether I'm doing a spot for RFD TV or Stansby or Kitco or Wall Street Bets or, Fox, I watch VSiN Sports and Information Network. That's what I watch all day long. I stream it. Okay. I know all those guys over there. And because, betting on games or gambling is very similar to trading in a fact that you can put yourself in at least the highest position of probability, which is all we're trying to do when we're trading. If anybody guarantees you results, they're liars. Okay. The guarantees are garbage because that nobody can guarantee that you're going to be here tomorrow. Okay. Because tomorrow, as they say, is promised to no one. Okay. So again, I'm only using straight market activity and logic and what the chart is telling me and nothing else. Because I have an opinion? Of course I have an opinion, but I don't use it. I'm using an algorithm to make my decisions for me, because what is the algorithm? It's something that was used, that it's made up of the trading skills that I have. Okay. The mathematical and mechanical parts of the market ties everything that I know, plus a little bit more, into a thing that triggers automatically, because things that happen, we as individuals with an opinion or with an emotion may not always want to do what we're supposed to. But here, if I mechanize it, I will always do what I'm supposed to. There's the difference. Okay. But again, if you look across the boards, the Dow, although weak, is the strongest of all, and the worst is either the NASDAQ, which is totally broken down. Now, again, this is a key point right here in the NASDAQ at like 12.9. Now, it may go back up. Look, it could go back to 13.1, or it could go back to 13.5. I'd be very surprised if it got past 13.5. And I will tell you this, I expect in the next couple of days, I don't think it'll be Monday, but it could be. But I would expect, if I were to guess, I'd say Tuesday. But again, this is just a guess. There's going to be what we call at Bubba Trading a rip your face off rally that's going to show up out of nowhere. Okay, just like the one you saw on Wednesday afternoon on the Fed news. Okay, those show up, and they show up in bear markets out of nowhere, and they make it. First of all, they look so good. You go, how could I miss this rally? Number one. Number two, they're fast, and if you're not ready, and you're on the wrong side, and you don't have your exits working, kiss it goodnight, because they're going to stick it to you pretty hard. And again, that's what you have to always remember about the world of trading. Okay, it's nothing more than probability. Okay, that's what you're defining. Even as a floor trader, I was a floor trader starting in 1980. Okay, so even as a floor trader, okay, we had an edge, but there was still no guarantee that every trade was going to be a winner. Okay, it still comes down to the same things. And if you look at the Russell, that is also breaking down. Okay, now Russell can actually come down to here to test the lows. Remember, the Russell's been basically, after being the big winner originally, a while ago, has been stuck in a range forever. Okay, look at this. And this is brutal. Okay, but it's finally broken down. Okay, but again, it was the first to peak, and now it's the last to really test its major support, where the others have already tested. Now, again, what they do from here, we'll see. But to me, as a market interpreter, everything looks to be like it's headed much, much, much lower. Okay, and again, it's not going to be overnight, but I don't care. I prefer, believe it or not, I'm short, and I prefer it not to be overnight. Actually, well, let me rephrase it. I'm always net long, because my entire profit sharing, retirement, pension are all tied into being long. I'm long equities, but I'm hedged against them. I have a hedging model, but we're hedged against them. But I'm net long overall. But again, I'm not worried about 10 years from now. I'm worried about now. Okay, when I'm trading or swing trading, I'm worried about now. Okay, and am I getting it right now? Okay, and I can certainly be long and short, not only the market at the same time, but sometimes I can be long and short the same stock if I'm using stocks once in a while. I can be long the stock in my pension and still short it here. Doesn't matter. It's immaterial, because the short-term trade is going to end. The long-term trade I'm holding on forever, unless something fundamentally changes with the account, with the company. So it really doesn't matter to me. Okay. Again, my partner, who passed away unfortunately, but a few years ago, but when we traded together in the same room, he had a position, I had a position, but many times if we would have stopped, we would have had no position. But we were both tracking our own progress, because one of us was going to be right, one of us was going to be wrong, and the other one was going to jump on the side, not knowing he or she was doing that, but that's just because that was what their trend was telling. And the trend is different depending on the time frame that you're watching. A trend on a 5-minute chart is different, or can be different, than the trend on a daily chart. Okay. And remember, there's a thing called universal price. Okay. And universal price is simply this: all charts are the same. And I can prove that. Okay. Because I've done it many times. I'll put up, I can't do it today because I didn't prepare for it, but I'll put up 10 charts. I will give you $1,000 cash money if you can identify one chart out of the bunch, the stock's name, the futures name, and the time frame that I'm showing you. Okay. I will offer $1,000 cold hard cash. Okay. And I will pay you immediately. Okay. If you're right. But you won't be right, so I don't have to worry about it. I'll never lose that bet. You'd have to have been copying from behind me, watching me set it up. But all charts are the same. It really depends on what time frame you're using, because what happens is they make the same patterns here. Here's 4-minute charts. Okay, this is what I use during the day. Okay, these are my day trading charts, right? I'm watching 8 markets at once. I'm day trading, and then here's the 1 minute, which I use to go after them and follow through it. But the bottom line is, the trend here, okay, is here. Here's the Dow. Okay, this is a 4-minute on the Dow. Okay, looks a lot better than the daily on the Dow, doesn't it? Okay, so again, remember that it's the time frame you're watching. So all charts are the same. All patterns repeat. The shortest time frame is always has to resolve itself backwards into the longer time frame, because no market can change trend until it starts in the shortest time frame. It works its way backwards, and that's how markets, it's like turning a steamship around. That's how they turn the markets around. Okay, from the shorter time frames first. Okay, so at the end, the best tools for a beginner is understand markets. Okay, that's the best favor you can ever do yourself is learn to understand how the markets really function, not the BS you have been taught, not the stuff you might have learned in school. Because I got news for you. Okay, when I was doing much more TV and I was doing much more in studio stuff, and I would give some trades, I would have to explain the trade to the host first before they let me give it out on air. Okay, so again, you need to become a student of the market if you want to be, more active and understand how everything works, because there's a lot of things to have. Markets work on expectations. Like, for example, I give you the perfect example was just the other day, Wednesday. Okay, we were much lower Wednesday morning. Here, I can actually show you specifically. Hold on, I got time to simulate this. Okay, so let's go to a 15-minute chart. Okay, so Wednesday, as we go back, and that would be May the 4th, right? Yeah, May the 4th. Okay, so here's Wednesday, May the 4th. Okay, so we came in, and this is May the 3rd, overnight trading, obviously nothing going on. And the market opens on my charts are Pacific time. So if you said 6:15, know that's specific because they're based on my Vegas house. And we opened up, and the NASDAQ got crushed. Okay, look at that. Boom, down huge. Okay, made a little bit of a V-shaped pop, and then kind of churned around as the Fed was announcing their decision. Okay, and the market expectation was 50 basis points, which is exactly what they got. Some had overshorted into that number, thinking that it wouldn't be, and of course it was. And suddenly the markets exploded with a short covering rally or a short squeeze, which obviously failed immediately on Thursday because it was nothing but a short squeeze. And what happens in a short squeeze is when the market should be going down, it stops going down. And people start to get nervous. And like on the trading floor, they start to look around. Wait, how come we're not going down? Nobody's doing anything here. And suddenly they start covering. And like rats trying to get out of a fire through a little hole, they're killing each other to get out. And that's when price and time become meaningless. Okay. Yeah, this is just a pregame. And if you want to copy of this pregame. The regular recording will be sent automatically when it processes it sometime this afternoon. This recording, if you want it, you got to email me. I don't send the pregame to these calls, okay? But you're welcome to have it. Just email me at bubba@bubbatrading.com, and you can have it. We started about 11:10 or so, 11:15. Okay, so you're welcome to have it if you want it. If you don't want it, like I said, I won't send this one automatically. Most of you are more interested in the presentation than what I'm talking about. So, but you obviously can do whatever you want. Okay, but I'll be happy to send it to you if you would like to. Okay. So yeah, we're going to talk about the presentation shortly. Again, we start at noon, and not everybody knows that I'm a sick person that starts 45 minutes early just to talk markets with everybody. Okay, so again, it's just kind of what I like to do, because again, I love to educate people and try to give them a better sense, because the pundits that you watch on TV, they'll ruin you, and I can't. It really makes me ill to listen to them, because news is noise. News has got no value. And somebody said, well, why, you're crazy? Well, look, in today's world, just figure this. When you get the news that you hear on TV, you're about the 1 millionth person who got that news. Okay. This is not 1980 when I started. Okay. And I told the story this morning on my options call, but this morning, okay, I told the story, and I'll tell it one more time. When I started on the floor in 1980, I started the CBOE. There was 50 traders in our office that we all shared. We had little offices within a big office, but we all shared. They had 2 computers there. They were 12-inch LED computers that were DOS based. Okay. We didn't have cell phones. Okay. We weren't walking around with a computer in our pocket that was more powerful than the one that launched the first Apollo rocket. Okay. You wanted to make a phone call, you used a payphone. Okay. So then there was news. It didn't travel so fast. Now, if Putin burps in Russia, California knows about it in about 3 seconds. That's the difference, okay, of information. So the news is worthless unless you just like the entertainment value, okay? Plus the fact that you're getting an opinion depending on what side of the political aisle you stand on. We all know the different channels that have different views, and that's fine, okay? But it's not the news. Okay. And then your last part is, and to this day, I can say this is still true. I am the only independent trader that traded only my own money. Okay. That traded only my own money. Okay. That was on TV. Okay. I had no edge. I'm not looking to do anything. I'm not trying to get you to be in my advisory firm. I was on TV as an independent trader of my own money. To this day, that's what I do. I trade my own money. Okay, so just keep that in mind. That's why the news is very, very tenuous at best when you look at it, because again, you have to remember where you're getting it from and who's telling you the story, because the story is usually false or usually leaning to something that they want to do. Hey, Craig, say something for a few minutes. I got a smoke alarm that's screeching here. Like, I'm not on fire, but it's the battery. I got to pull it out. Just say something for.
Oh, that's on your end. I thought that was on my end. I'm thinking, are you kidding me? The fire alarm's going off now.
This house is. I'm still here. This house is old. Okay, and they left a few things. I couldn't remember to do everything, but I heard it, and it's.
I thought that was me. That's funny.
No, it's me. It was. I can hear it. I just went.
Yeah, I was gonna say. Yeah,
I disconnected it. So if I burn down kids, what the hell? It was nice to know you.
Yeah, so, prices.
Go ahead.
Prices. I was just gonna say, price is king. It's right. Like there's too many variables that can negate your trade idea. With respect to news and everything.
I mean, again, the news is going to be. You're going to see it more often than not. Okay. And I wrote about this in my first book, which was published 10 years ago. Okay. That you bought a stock for earnings, and the earnings were unbelievable, like they're supposed to be, and the stock was soaring. And by the afternoon, the stock was lower on there.
Yeah.
Again, it happens all the time. It is not unusual. I mean, yesterday's jobs number, if you believe in the crap that they report, was a bullish number, but yet the markets got clobbered again.
Yeah.
So again, I'm trying to help you. Okay. Too many people overreact to what they read in Barron's or the Wall Street Journal. And I can say this with all honesty. in 44 years as a trader, a professional trader, I have never read the Wall Street Journal. I have never read a copy of Barron's. And for the last 5 years, I haven't watched 1 minute of TV, okay, of business TV, okay, because I don't care what they had to say. All they can do is give me a bad idea because they don't understand the markets in the first place, and they have certainly no idea how the markets work. Very similar to the Federal Reserve. They do not understand the function of asset classes pricing themselves through price discovery. So as we get ready, I remind you that this was just a pregame, and we're going to start with the actual presentation, which will be me and Craig together on certain portions. And again, if you want a copy of this pregame, certainly just email me at bub@bubbatrading.com. I'll be more than happy to send it to you. But the regular recording will go out for those of you who will ask. Okay, it will go out sometime after we finish. I have to wait for it to process, which again, I have no control over that. But once it's done, it will be emailed to you. You'll be able to look at it and go through it and look at it again. So again, we like to share, and I know that Craig and I did an event together for a week together, every morning, and we want to make sure that we provide you with enough stuff and information to make sure that you can make the best decision for yourself. And I think that's all we can do, is make sure that we're setting you up to be in the best position.
Right.
Okay. So what I'm going to do now is I'm going to stop this recording. Okay. I'm not going anywhere, but I'm going to stop this recording and get prepared to go. Okay. And again, if you want that recording, it's bub@bubbatrading.com, but I'm going to start a new one so it's clean and it's right from the beginning. So just stop this and let my girlfriend speak to me. My darling, thank you. Okay. And in about 2 minutes, I'm going to start the next one. But we are with Craig Hill, and of course he's with Ninjacators. And we're going to do a couple things together, but basically I'm going to pitch and show the day trader's dream and what we do. And Craig's going to talk about some of the indicators and some of the free stuff they're giving away as a partner and sponsor in this event. So it's going to be a lot of fun, and I'm looking forward to it. And Craig and I worked real well together. We had never met, but I've heard about him and knew about him. But we had met for the first time and worked together, and it was kind of fun for actually it was a week for 2 hours a day, right?
Fun. It was a lot of fun.
So it's a great event, and we'll get started here. Just now I have to wait till high noon because I got to give everybody a chance to be here. I don't want to yell at me, because I have a tendency. That's really how the pregame started, by the way. Once I started 15 minutes early, and then I started 30 minutes early, then I started an hour early. I guarantee anytime I open up a meeting, there'll be somebody waiting to come in. So I just decided to do it. bubbatrading.com, bubba@bubbatrading.com. Okay. You have to email me directly. I can't do it from here because I can't copy and paste from that. It's bubba@bubbatrading.com. You'll see at the end of the presentation my email address as well, but I'll be happy to send it to you. It'd be my pleasure. Okay. Again, I like to share with everybody. I think it's important to help and educate our community and our society, because I think that, unfortunately, our school system, which is why I have a high school program, by the way, as well. Before COVID, we were in like 700 high schools in which I donated, and basically, other than people that helped through Patreon, financed it myself. Okay. It was free to the schools. Okay. And I'm in the process of rebuilding it right now. But I do believe in financial literacy, and I want people to be educated. I mean, I'm an old man, so where am I going? Okay. So I want you to be, I want to educate people in financial literacy, so you can at least make a better decision. Okay. All right. It looks like we're about there, my brothers. Let me start this up, and we'll get ready to rock and roll here. And what's up, everybody? Welcome aboard to Day Trader's Dream. And I'm today fortunately joined by a new friend of mine, Craig Hill. I know about him. I've heard about him. I know he's traded for a long time. He'll tell you about himself. But this is a partnership event with Ninjacators, and I know they got a whole bunch of stuff lined up for you. And they got some slides in here that'll give you some free giveaways and some good education. And it is great to be with you, my friend.
It is great to be here. Thanks for having me.
My pleasure. Listen, it's again, we're both on the same page. We want to help and educate the investor. I mean, the truth is, an educated investor is better for everybody, but more important, it's better for themselves. So You know, I want you to be always prepared. And again, I'm a big believer in teaching and sharing and helping you. And so let us begin. And the first thing I must do, though, is obviously, you see this in presentations, the disclaimer. I mean, look, I'm not going to make your ridiculous bullshit promise anyways. Excuse the language, but you know, it really angers me when I read those things of the promises of BS. I can't. I have great deals of dealing with that. Okay, and I get hundreds a day because I make sure that I know what's going on. But anyways, the past performance does not guarantee future results. I'm going to show you, before this is over today, I'm going to show you the results through yesterday. Okay. I will show you the equity curve through yesterday. That's what I have. It's as close as I can go. I am not going to project forward. I'm going to tell you what we do, and I'm going to share it with you. Okay. In the meantime, which brings me to this part, right? Nobody likes to talk about this part. Markets have drawdowns. Okay. You're going to have a drawdown we're going to have drawdowns in everything that we do. Okay. It does not matter. They are unavoidable. Okay. I don't care what they tell you, who tells you they're going to make you $1 billion tomorrow. Drawdowns are unavoidable. Okay. And if you don't think so, well, then you're living in fantasy island. Okay. Because you cannot escape a drawdown. I don't care if you're the greatest trader in the world. You cannot escape them. They come unannounced, just like the markets don't announce themselves. So I am not promising you this today that you're going to make millions. I'm promising you a great education and an opportunity and a method that works without emotions. But in the meantime, let me introduce my co-partner today, Mr. Craig Hill. And if I can find where my mouse went to, there we go. And Craig, why don't you tell us about yourself so you can at least educate the folks here who you are?
Yeah, sure. So yeah, thanks again, Bubba, for having us and having me. And guys, yeah, I joined Ninjacators beginning of last year, actually. But before that, you know, I've been involved in the financial markets since 2006. I ran a trade room from an e-mini trade room from like 2010 through 2018, and more recently, swing trading room from 2019 to 2020. This is right before joining Ninjacators. And I'm doing some one-on-one coaching with I have some clients that I do some one-on-one coaching with. So I've trained and mentored between the trading rooms, I'd say thousands of students at this point, 10 years, been at it for 10 years. So, but my goals, are to teach. I'm with Bubba. It's like, you're not gonna, you will have losing trades and winning trades. The key is to, have your winners pay for your losers. Okay. And so my goals are to teach clients a methodical approach for identifying those high reward, low risk trading opportunities, and help clients develop the skills, because knowledge comes fast, but the skills is it's like flying an airplane. You can study for and take the written and pass with flying colors, but you still have to learn how to fly the airplane. Same thing with trading. You got to spend hours we call it screen time, right, Bubba?
Listen,
yeah.
You know what, Craig? I try to learn something every day.
Yeah.
And I've been doing this for 44 years. I try to learn something new every day.
Yeah. And same here. I mean, I learned a lot from you in that 5-day workshop, just listening, and it's like all the time. So, but the idea is develop the skills necessary to successfully trade the markets. And just like Bubba, I mean, I don't have the experience he has, because I've only been at this since
you ain't old enough to have the experience I have.
I'm not.
I've been trading longer than you're alive.
Yeah, you have. So
anyway, I know you got some great offers too, and I just put this in to start. You can give a general idea of what they have to look forward to, but we'll get to it later when you start taking over. But go ahead and give them a quick intro.
Yeah, we'll get into this later.
Okay.
But yeah, we'll on next week on Wednesday. I'll dive into more details later at the end, guys. Right. But just be on the lookout. We're doing a live master class next week on Wednesday, and I'll talk more about it at the end. I don't want to take away from you.
Awesome. So. And again, my name is, if you don't know me, I am Todd Bubba Horowitz. I've been a professional for 44. This is my 44th year. I became a floor trader at the CBOE in 1980. I was one of the original market makers in the SPX. Okay, now you all know what the SPX is now. It's a monster. But believe it or not, that started out with 5 traders that built that pit to start. And the biggest thing I only care about is everything that I recommend, I trade myself. There is nothing, if I don't want to get in it, I wouldn't put you in it. And that's one of the things I always pride myself in. So today, we're going to talk about just the facts, BS we all must contend with, price discovery, manipulation, algorithmic trading, margin and leverage, the mental game, futures, letter direction trading, and capital trading group, real results as of May 6, 2022, how you can take advantage now, and then a special offer from Ninjacators. And as always, I will stay with you as long as you want to ask me questions. Okay, I'm going to stay. I'm not going anywhere. Okay, there's no time limit. Okay, I will be expedient, but I want you to be able to ask me what you want. But please hold any questions regarding the presentation to the end, and then afterwards you can ask me about anything you want. Okay, so when I talk about just the facts, right now, you know how you don't know me. If you don't know me, you don't know how wound up I get when I see this crap. But I just want you to understand the absolute facts of markets, the facts of how they work, the facts of what we can possibly do, and what we do statistically wise, because I'm a much bigger believer in math than I am in anything else. Now, as a lousy student, I was a good student. I just never went. Let me rephrase it. I got good grades, but I never went. However, I learned, my education came from the streets of Chicago. Okay. But when I see this stuff, okay, the BS marketing scams, the unbelievable returns that you get promised, so that's a bunch of crap. We all know that. If you don't know that, you need to learn that. Okay. There is no such thing as these kind of returns. I don't care what you know. You ain't getting 47,000% return. You're not getting 558% on a regular basis. Okay. You get the occasional no-brainer that shows up. Listen, that's great. And I'm glad when you have them. But please don't fall for the scams, because you'll end up losing your money and you'll pay way too much to lose your money, which is a crime. Okay. In the meantime, price discovery is a very important tool of understanding the markets and how they work to begin with. Okay. Price discovery is very simple. Okay. Buyer and a seller meet and they have to exchange wealth. Okay. And this is the reason I'm talking about price discovery, because, many of you, when I write articles, you want to talk about manipulation, and whether a market is manipulated or not, it doesn't really matter, because the price discovery has to come in whether it's manipulated or it's not manipulated, right? If you think that gold is being manipulated lower, it's still finding buyers that is still holding it at its current levels. Okay, that's price discovery. It doesn't matter. Again, there's a buyer and seller have to meet at a certain price. If you've ever sold a home on your own, okay, or if you sold a home at all, they have a price, you have a price you're asking, they come in with a bid, you meet somewhere in the middle, and you have discovered at which place you're going to let the assets transfer. You're taking the house, they're getting the cash. Okay. So please, when you hear the manipulation, it doesn't matter, because market manipulation, there's spoofing, which they say theoretically outlawed, which is garbage. They can't outlaw spoofing. The big banks do it all the time. The big banks will make a statement about a product that they need to go one way, and they'll say the opposite, so that the street will react. They'll get out of their bad position, and then the market will do what they really know it's going to do, which is go the other way. It happens. Look, I live with it for 30 years on the trading floor, watching the big bankers have a sell broker on one side to create a little stir when they were actually trying to be buyers on the other side and get the pits worked out. But again, at the end of the day, see, here's what it goes back to. It's still got to be determined by price discovery. And that's what our algorithms do, is they measure price discovery, which is, again, following the trend. Because if you've ever heard of the turtles, Richard Dennis made a statement. I actually know Richard pretty well. We traded together on the floor when he was in Chicago. Okay. And his theory was, if you can follow the rules and follow the trend, then I can teach anybody to make money. But of course, unfortunately, too many people have opinions that don't allow them to continue to follow the trend and do what they're supposed to do. Okay, so just keep that in mind. But please don't, with the manipulation. My grandmother used to like to go to the harness races, and we say, "Grandma, the horses are fixed." She said, "Maybe I'll bet on the crooked horse." If you're following price action, you're following price discovery, you'll be on the right side of the market. And day trading, trading is a math business. Okay. Unlike popular belief, it's not about the fundamentals. It's not about this. It's not about that. Trading is about math. It's about geometry, basically. I mean, if you think about it, it breaks down into a math model. Now, again, there's reasons why, but you can see the patterns being developed as they happen. Okay. If you look at any one of my charts, okay. Now, again, I don't sit there with a slide rule putting these things together. If you look at them, they're all marked. And what are they marked with? Oh, triangles, rectangles, okay, squares. Look, again, it's based on everything is based on some sort of a mathematical model that can determine a lot of things for you. Okay. And that's what you want to remember, because again, opinions are as good as the moment they are, but they're very seldom right. Okay. Which is why I will never commit to I'll tell you what I'm thinking, but I'm not going to trade what I'm thinking until it shows up in the chart itself. Okay. Now, margin leverage, which is a big part of what we're using, because of course we're going to use futures for this model, because it's very difficult to be a short-term trader, or a fast trader in options, because of course you're giving up too much of a dramatic edge in the option market. Okay. Again, listen, I was born an option trader. I still trade them, but I'm not going to day trade options because the bid offer spreads will kill you. Okay. You can't overcome the edge. So you have to understand the relationship between margin and leverage. Okay. And one of the big things about margin is during day trading or daytime trading, you get a better margin rate than overnight trading. Okay. So you can control a lot more assets at one time. And if you're using, we don't trade stock and stock options. I could trade it on a long term, and please hold your questions at the end, but I will answer that one. Again, if you want to be active, trying to trade options is a fool's game. In fact, you can trade with me. I'll make a tighter bid offer spread for you, because you're going to lose anyways. You cannot overcome the edge that you have to give up in the option market. And again, I have a lot of options position on right now, but it's not anything I'm going to get in and out of today. Okay. But it's essential for you to understand how it works and what you're gaining for it and the benefits that you get for it. Okay. So, margin is taking a small amount of money and using it to leverage up a larger amount of money. Now, basic day trading leverage, let's say your margin on an S&P future, the mini S&P future, overnight is probably 10,000 or 11,000, 12,000. I don't even know what they are anymore because they change them all the time. But if I'm day trading it, that margin is $1,000 for during the day. So if I have a method that works as a day trading method, that I can leverage up, in theory, $215,000 for $1,000, knowing that I have an exit point at X and I can get out, and if I'm wrong, I'm getting out and taking my losses. You're getting a hell of a return for your money. Okay, because you get the benefit, and you cannot do that in the stock market unless you have enough money, A, to cover the initial margin, and B, to deal with the FINRA day trading. So again, you can control a lot more things when you're taking advantage and using the leverage that the markets give you. Okay. Now, to me, trading is nothing more than the game. It's a big game, and the biggest part of games is what? The mental side. That thing between your ears tends to get in the way, either through an emotional meaning or an opinion or something you read, and all of a sudden you got to do this. Look, I call it gaming the market. You have to be clearly, first of all, even keel. Okay. You cannot let the gains get you too excited, and you cannot let the losses get you too upset. Those who escape the mean of their own personality make horrible decisions. Okay. It's about being even, understanding that if your probability is X, then the rest of the time you're going to lose. So if your probability is 66%, 34% of those has to be losers. Okay. But if you're margining and leveraging properly based on the amount of money you're trading with, then you should not have any nervous ticks throughout that. And that's the hard part to teach, because the emotions happen to play tricks on people. And, when I'm trading live, okay, I trade every model, as you know. So I trade live first, 4-minute charts. And some days I say, just take the day off. There's nothing to do. There's nothing to see here. And if you sit and stare at it, you're going to see a mirage. So you're better off taking the day off. But if you invest in yourself, which is starting to learn and understand all these things, you will be much happier. You'll be much more successful, and you will take much of that emotion out. And if you use futures, why they're the best is because futures give you a lot more leverage. Okay. And again, the perfect example is SPY. One mini S&P equals 500 shares of the spiders. Okay. 500 shares of spiders is 215,000. One mini S&P is 215,000. But how much margin do you have to post to trade 500 shares of the spiders versus the $1,000 you got to post to trade one mini S&P? Same exact product. They're just derivatives. They're a derivative off of each other. Boom. Why would you not do that? The futures markets are much more liquid, at least the ones we trade. We don't trade in illiquid markets. It doesn't make sense. We call it the Roach Motel. The commissions and execution costs are low. The future markets are much more efficient. Okay, they trade much more efficiently. Most of them trade, with the exception on big announcement days like the Fed day. They trade usually one tick wide. So the bid offer spread is very narrow. Okay. Short selling is not a problem. Okay. Day trading margins, and there is no FINRA day trading rule. Okay. So if you had $10,000 in an account trading options, you can only make 3 trades a week. Futures, you can make 300 trades a day if you want, if you've got something to trade. Okay. So again, these are all big advantages to why. And then automating it or auto trading it, which is what we're doing, because this is in partnership with Capital Trading Group, because these signals have to be executed right away. By the time I would send them out, they'd be old already. Okay. And so they have to do the executions. Automate trading is to minimize the emotion. Now, we all have emotions, but it is how you react to them. The discipline is a very challenging topic for many. Okay. And you're not making the decisions being made for you. Okay. You can diversify into, we trade 9 different products. Okay. Have you ever been at home and been in a position your internet goes down? Okay. What do you do then? Okay. Most of you don't have redundancy to have something to back it right up. I do. I have 3 times redundancy in my office, but that's besides the point. Okay. Most don't. Most don't even think that ever happens. But again, it happens. Okay. You can monitor your trades through your platform at all times. Okay. But you've also got people watching them that know what the exit point is. You never miss a trade, and you take out the temptation to cherry pick. Okay. Has anybody here ever cherry picked a trade? Thinking they knew more or better? The one thing about trading, if it sets up to your qualifications, you take it. Okay. You take them all, because nobody knows for sure the next big winner. Okay. They may tell you they know. If they tell you that, they're lying. So when you're using an algorithm, which is what we're using a proprietary algorithm, which uses, again, I would say it takes my brain, which may not be worth much, but it's pretty good mathematical. Okay. And takes all things I know about trading, plus it takes a lot of the mathematical stuff we talked about and puts it into a system that triggers signals. Okay. And it triggers signals on timeframes that we determine that we want to be able to trade on. And in our model, we chose 60-minute cycles. We don't want to be overly active. Okay. We want to be just active enough to catch a nice running trend for a while. And, the automated part of it, again, it has to be, but I want to remind you all, this is always a hot button with me. And if you've ever seen me on air, you've heard me call out many of the pundits for saying things like this. But when they start talking about high frequency trading, first of all, it makes me cringe first, then it makes me angry, because the truth is high frequency trading is actually an electronic market maker. They replaced me. They took my job away from me. So I went from working, depending on the time of year, and playing golf 180 days a year, from 1 hour to 5 hours a day to now working 18 hours a day, because they found a way to mechanically replace me. Okay. And the high frequency trade is working on fractions of a penny on millions of transactions. Okay. They don't push the market up or down. But when the market goes down big, it was the high frequency traders. You know what? Tell them they're nuts, because they're wrong. Anyways, so day trader's dream is it trades the pit hours only. Now, somebody's gonna say, well, we don't have pit anymore. Well, we don't, But believe it or not, the action in markets still follows the original pit hours. Okay. So for example, okay, we trade crude, gold, the euro currency, the Canadian dollar, and the Australian dollar. Those all open up at 8 o'clock Eastern, 7 o'clock Central. Okay. So we get no signal before 8 a.m. on those products. Okay. Or 9 a.m. Eastern time. Okay. But those were the pit hours. And that's when they trade. If you look at a chart, you'll see that's where the volume picks up. Okay. Those trades are, if they're not exited during the day and they don't reverse, they're automatically closed at 3 o'clock Eastern time. Well, actually, let me rephrase it. Gold is closed at 1:30 Eastern time because that's when that pit closed. Crude is closed at 2:30 Eastern time because that's when that pit closed. And the currencies are closed at 3 Eastern time because those are when those pits close. If they reach the end of the day, they are closed automatically. There is no exceptions. No, well, let's wait. 3 o'clock hits, they get closed. Okay. The equities are, the pit hours in equities were 9:30 to 4. That's when we trade. Our first signal could actually come at 10 o'clock. Okay. So again, all orders are done in the micros or minis. Okay. We have an aggressive and a regular model. Trades are done in block orders. Everybody gets the same fill. Okay. And all trades are executed by Capital Trading Group. Now, we can offer this to those worldwide, basically even Canada. Okay, we have a workaround situation for Canada that allows us to execute for Canadians as well. It's always been a problem. It's been my 15-year goal to solve it, and we've almost got it 100% solved. But I do have it solved for this model, so that's good. I'm happy about that. Now, these are the results I'm going to show. These are audited. Okay, these are from an independent auditor that at the end of every month, because these results are published and are under regulatory bodies, so they get published, and these are done, and you can see the results, okay, of the model. Okay, it tells you the best day, the worst day, and you can see the percentage of gain. And this is the regular, it's standard. It's a $10,000 portfolio, okay, that is up about 7%. Now, it was the reason that the percentages are smaller. We originally based it on 20,000. Okay, but I don't really care. I don't really care about the percentages, but I'm just letting you know it was really based on 20, but now it's based on 10. So those averages, as they make money or lose money, will be better or different. But again, if we go to the aggressive model, okay, the aggressive model is up 10 times as much because it's like it trades 10 times as big basically, and the aggressive takes 30,000 to be a part of. But again, you can see we show you the max drawdown, the whole story, the equity curve, everything is there for you because we always believe in full disclosure. Okay, you get results, you get the total results every Saturday morning. I send them out, or Saturday afternoon, with information like this. Okay, and I'll show you the exact results for this week as well as we go forward. But these results are managed by others, not by me or Capital Trading Group. Okay, now what is letter of direction auto trading? That's a great question. I'm glad I asked it. Letter of direction is simply this: Capital Trading Group can make a trade that the system kicks out only. Okay, they don't have any control with your money. They can't do anything but the trades as they come out. Okay, that's all they can do. You control your account. You can withdraw when you want. You can quit if you want. You can do anything you want. Okay, all letter direction is so you don't get churned by like they did. A lot of people are afraid of futures because of what happened in the early days. That can't happen here. Okay, this is by law. Okay, so they get to execute exactly what is told by the model. Okay, and of course, the benefits are you don't pay any data fees. You take your emotions out. You maintain control of your account. Stop whenever you want. All clients receive the same price for execution. No pattern day trading restrictions. That's a big thing. And of course, Rule 1256 for taxes. It's not software. This is done by human beings. Okay, CTG is letter of direction, which is people. Okay, that does it. Okay, 1256 tax, and again, check with your accountant. But I will tell you that it's 60-40 tax treatment. It's futures are taxed much better than equities as well. Okay, so you're not only making money and you're saving on your taxes because you pay less. If any of you trade the SPX, that is also treated as 60-40. Okay. So very big benefits to futures as well. And CTG, they were founded in 2006. I know these guys for 30 years. Pat and Nell, okay. They've been together, and they used to be a Chicago Corp with base down on the floor. And I'll tell you what, you know what's great about them? You call, they pick up the phone. You don't have to go through 9 miles of email jail trying to get through them. So I've got 95% of my money with them in the futures world. There's nobody better. I have other accounts, I have other brokers, but they've got most of it, and they do the lower direction trading for me. Okay, they trade every model that I offer through them. They trade my account as well. Okay, and again, the 1256 is 60-40 tax treatment, no padded day trade limits, no wash sales. And again, check with your accountant always. Okay, don't just take my word for it, but you can look it up. It's actually, I think it's even on the CME site. But you always need to check with your tax professional as well. Okay, and so you open a brokerage account with Capital Trading Group, and you can choose either you want aggressive or you want regular. Okay, and you can change. You always change your mind later. Again, you're not committed to be in only one. You can move anywhere you want as long as you put the capital. You can do what you want. Okay, CG3 trades and executes for your account. Any live variances across our client block are average across all clients to ensure that all receive the same net result on each trade. Client can see trades once they're allocated. That's a big thing to remember. Okay, the trades are done in bulk, and they're not necessarily, just because CTG did them doesn't mean they get allocated by the back end right away, but they will eventually be done. But you'll always know if you want, because I post the trades we have on sometimes in the chat room, and I will start sending them out shortly, so you at least know what you're rooting for. Okay, and of course you have access to daily and monthly statements as well as a 1099 at the end of the year. Again, there's full disclosure in everything. Okay, you get the ability to see everything that you have. Nobody wants to hide from you. We're all here for the same reason. Everybody wants to make money. We want you to make money. Making money is a good thing. Okay, and it's led to me to a very nice life for 44 years so far. Okay, and I'd like to say I'm looking for the next 44, but I'll take the next 20. But my kids will enjoy it. So again, there's nothing better in my opinion as a career and as a thing. I mean, I just love watching. I love talking about it. And when you talk about the difference between futures versus options, somebody asked about options earlier. Look, I'm an options fan. I wrote 2 books on options. Okay, and I got a book I'm working on futures right now. But options are not day tradable anymore. The variance in bid offer spreads are too wide. Okay, you can't get in on enough. And the other problem is you cannot really set a legitimate stop, because if the bid offer spread gets too wide, they can take you out by accident. There's a lot of advantages to trying to day trade options. Okay. Now again, it doesn't mean I trade a lot of options. I probably trade. Well, I mean, my hedging position alone takes 1,000 options. Okay. So I trade them. I get them. I understand them. But when I want to day trade, it's never options, because you just can't. It's getting worse and worse. And especially now with current volatility where it's at, you get Berber, you get murdered. You can't do it. Okay. If you're doing it, you can make money, great. Same problem. Options carry. Yeah, you're going to see the track record in a minute. Did I miss? Did I screw up here? Is it possible I screwed up? It is possible I screwed up here. Wait a second. I had them all. Okay. Well, I'm going to show them to you. Fortunately, I can work on the fly. Okay. And I'm going to do that right now. Okay. Hold on 1 second. I did have, believe it or not, I had them up, and I must have forgot to put them in, but I still have them. So I'm going to show you the actual reports. Hold on. Give me a second. A little bit of a delay. Okay. I always find a way to screw something up, but what the hell? Okay. I can fix it. Okay. And this is the regular as of yesterday. Where you opening up? There you are. Okay. This is as of yesterday. Okay. And you'll get this. Okay. Every Saturday. Okay. Hold on. I pull it over. There you go. Now that equity curve is off. There's a little mistake there, but again, it doesn't matter. Here's the exact results for every day that since we started. This started on December 3rd. We had a hypothetical, but I don't show hypothetical results. I only show real money results. Okay. I'm not a big fan of what could have been. I like to show the actual. Okay. And these are actual real results. These are posted, and these are including fees. There is no, this is it after net at the end of the day. This is how you did. Okay. And this is through May 5th. I'm sorry, May 5th. Okay. And this is, again, you can see the week. Okay. Every day that it traded since December 3rd. Some days we don't trade. Again, we don't make trades up. If they're not there, we're not trading. Okay. And here is, oh, actually, I'm sorry. Here's the equity curve, and here's the results, and here's the 5.63%. The model is up. Okay. Pretty good return. And again, that was based on 20,000, not 10. But again, that's the number I'm showing, and I'm not going to try to change it or justify it. I want you to be understanding exactly as I showed it. And that's all that's important to me. Okay. That you see it. And here is the aggressive model. Okay. Same thing. You get the results. Now, the first thing is aggressive did not start till the 13th of January. Okay. We didn't think about it, and people kept asking, I want to trade bigger. I want to trade bigger. I said, okay. So the difference between the aggressive and the regular is simple. The regular trades micros, 2 micros, okay, per contract, and the aggressive trades 1 mini. So the aggressive trades between 5 and 10 times as big, which is why it takes more money and why it's got much. The results are almost identical if you divided that by 10. Okay. We went back to 10, that I told you the equity curve was wrong. Okay. There was a mistake made. Okay. We started with 10,000. Okay. The account was originally built on 20. Okay. This one was built on 30. It's now at almost 50. Okay. The other one was started at 20, but really it should have been 10. Again, I just want you to understand what you're looking at. That's all. Okay. The actual results, again, you can just simply go to the audited results if you're concerned, right? Because these are not what I send out. These are audited returns that have to be approved, in the brokerage industry. Okay. These are not anything that can be played with or found with. These are based on, but the original amount we thought we needed was 20. It turned out we needed 10 for the regular, and we needed 30 for the aggressive. Okay. Fees are included in what I showed you. Okay. Fees are included in these numbers here. Okay. The daily results, fees are included. There is no more fees. Okay. This is a total return after fees is correct. Okay. So that's exactly right. Okay. So the fees are included. Okay. And that's, again, I only show results with the fees in this model, so you know exactly what you're looking at. Again, we're very much into full disclosure and making sure that you get exactly what you thought you were getting and nothing else. The fees, I don't remember exactly what they are. The only thing I can say about the fees is to have they're at least half of what any other broker would charge you to do letter of direction trading, which is broker assisted trading. I don't remember the exact number, but I know it's half, because that's one of the things that appealed about CTG is they're fairly priced and we can make money at their fees. Okay. They're not expensive. Some of you are probably paying more for commission self-directed, but you feel free if you become a member, you can call them and ask them. Like, I don't keep the exact number. I don't really know. To me, it doesn't really matter. I'm making money. That's all I care about. Okay. Fees come and go. I just want to be ready. So I'm going to make you an offer now, and Craig's got a bunch of stuff after I make an offer. And I'm going to also stay around and answer any questions you may have. So again, if you want to become a member now, okay, day trading futures, all executions are by Capital Trading Group. Okay. They're all done automatic. There's no overnight risk. Okay. Everything is closed before day's end. All trades are determined by the proprietary algorithm. There's no emotions. For the first 75 people, it could be $99 a month or $800 annual. And then you go to bubbatrading.com/DTD, Day Trader's Dream, DTD. Okay. You have to open an account with Capital Trading Group if you want to use this model. Yes. You cannot get the signals without it. They cannot be dispersed fast enough. And I am certainly not giving you my algorithm to do it yourself. Okay. Again, this is a proprietary algorithm. It can be done in an IRA account. It can be done in any kind of account you want, as long as it's done through Capital Trading Group. Yes. I have many people that have their IRAs in there, including me. Okay. Yeah, yes, it can be done in a SEP. It can be done in a regular, 100%. Okay, that's BubbaTrading.com/DTD. Stands for day trading. And for the first 75 people, okay, we only take X amount each time. Normally it's 50, but we have a real big crowd here today. And I wanted to make sure that everybody, this does not work. It has to go through Capital Trading Group. It does not go through TOS. Okay. It cannot use, it doesn't use your own platform. They make all the executions. Okay. And you will have a login to go to your broker, that you'll have a broker there. But TOS, they're too expensive. Number one. Number two, they don't offer all the futures either, which is a problem. Okay. Because of course, if you trade some things, which we do trade from the, that are from the COMEX, you can't get to them on TOS. Okay. Account size is 10 to 30. Okay. 10,000 to 30,000. Okay. That you get to use. Again, you want to be in the aggressive or the passive. Okay. They're both exactly the same with the exception of the size of the contract they trade. But you can try one and move up. You can watch the results and change your mind. Again, whatever you want, I want you to be comfortable. That is my biggest thing to everybody, is to be comfortable with where they are. If you've never traded futures before, it's a comfortability study for me. Okay, I want you to be happy and comfortable. We have a chat room that you can hang out with. You can come to my Monday night call with everybody. Again, I want you to be educated. That's why I don't try to give you feed you a line of crap. I want you to be straight. Okay. Yes, UK can use CTG. Yes, 100%. Okay. In fact, believe it or not, okay, it's 5%. I don't know what you're asking the return. The 9 markets that are traded are the euro currency, the Canadian dollar, the Australian dollar, gold, crude, S&P, NASDAQ, Russell, and Dow. Right? Hopefully, the board, the CBOT, even though they're the same, will come out with a micro bond product, because I'd like to put a bond product, but the bonds themselves are too big. Okay, but those are the 9 markets that are traded. Let's see here. What is the minimum? It's 10,000 for the regular is the minimum. Okay. Yes, UK. In fact, those of you in Australia who decide to be awake in the middle of the night, which some do, I have a lot of members in Australia, we're actually doing a special webinar for those in Australia in a few weeks, which means that I'll be up in the middle of the night doing it. But in the meantime, I have members all over the world. Okay. They have no liquidity, the interest rate micros. We looked at them. Trust me, I got to have liquidity. I got a lot of members. I cannot afford illiquidity. I never traded futures before. Do you help set up? Yeah, no. CTG gives you everything you need to know. And I'm going to start doing some training sessions as well. But it's basically hands off. Okay. But you'll have no problem picking it up. It's the same thing. It's a bid offer spread. We get confused, but if you ever trade a stock, a future is the same as a stock. Okay. It's the bid offer spread. Okay. Yeah. You have no problem. You'll be taught plenty. You'll get with me, you get plenty of education. Okay. So, look at Guitar Boy. Joe, 20,000 in 1, 2, 22, 21,000. Now, thank you. Thank you, Guitar Boy. Okay. I have accounts in North Korea. I got accounts everywhere. Okay. In specifically North Korea, exactly. I don't have the answer to that. Okay. But I mean, the ones I know for sure are Singapore, Australia, Japan, China. Okay. Brazil. I mean, I can't name them all, but I got them all over the place. Okay. That I do have. Okay. So, but again, we want you to be happy members. Look, the bottom line is this. Okay. I want to deal with happy people. I don't want to be miserable. I'm the customer service agent too. I don't have a staff. I'm the staff. Okay. I've got people that work on my website and computers and take care of all the back end stuff. But when it comes to the trading stuff, it's me. So I want people that are happy, that understand what we're doing and want to benefit from what I'm teaching. Okay. So that's where I'm trying to to put you in the best position for yourself. Okay. So again, it's bubbatrading.com/DTD. And let me just make sure I got all the questions. I'm going to turn over to you and I'll come back for questions later. Great. Great to thank you, Jennifer. Oh, look who's here. My girlfriend. What's up? Where you been? Yeah, I've been thinking about you. Anyways, so let me turn this over to Craig and I'll come back and answer all of your questions if you think of some things while we're waiting. Silver's too big and they don't have a micro product. I would love to trade silver, but they don't have a micro product to trade. Believe me, anything that has a liquid. Now, remember one thing though. I want you to be clear on one thing. Okay. I love silver. Okay. And I have no problem trading it, but silver is not among the most liquid either. Okay. I would love to trade it. If I had a product that I could trade here, I would trade it. But unfortunately, they do not have a micro or a smaller account in silver that's small enough for me to want to trade. 10K can only go to the regular. Aggressive is 30K. Okay. Aggressive is 30, regular is 10, and that's it. Okay. And you can go monthly or annual. And if you change your mind and want to go annual after you went monthly, you get 3 months to upgrade at the price I'm offering today. Okay. If you don't go for the annual now. Okay. But that's it. Okay. Again, everybody pays more. This is always the special that when I do a webinar with people that we're going to offer a special price. Okay. So make sure in the meantime, gains are every month. They come out you get every Saturday, you get a report. Every month I get that sheet that's been audited. Okay. So remember, okay, we want to make sure that you are taken care of, which is why we have a chat room, education, and we make sure that you get the best of it, which is why you also get invited to the Monday call, okay, which is, 2 hours of talking markets, okay, going through charts, going through news, what it means, what we expect, and so on. In the meantime, Craig, I'm going to turn it over to you, but I will come back, okay, with anybody who has any more questions and close everything up. But Craig, here you go, baby. Take it away. I'm going to go ahead and just tell me when to flip the slide for you, if you don't mind. It'd be easier, I think.
Yeah, I actually added a couple at the end there. So
okay.
And then
I mean it. Let me see if I can do it quickly. I don't want to. Obviously, people's time is valuable. I want to see if I can transfer you over real quick, and I would be happy to turn it over to you if I can do it quickly.
Yeah.
I had no problem.
You just go to
make co-host.
That's fine. That'll work. That should work. Yeah.
Okay, there you go. All right, you can take over.
All right.
There you go.
Okay, screen 2. There we go. All right. Yeah, you guys should see the same slide. So, yeah. Hey guys. So, look, if you like what,
Craig, can I interrupt you for 1 second, please?
Yeah.
If anybody's got, I'm almost up to quite a few here. I counted, but it's getting close. Anybody who's having a problem, I see a couple of notes that they're a problem. If you email me at bubba@bubbatrading.com, I guarantee you get a spot. Okay, you will get the price that I'm quoting right now. I give you my personal guarantee. If you email me because you're having a problem, I will save you a spot because I'm going to open up 20 spots for the recording anyways, but I will give you one. I know sometimes some browsers have issues. Email me direct. I will send you a different link that goes right in itself. So if you have a problem, please just email me. You're covered. It's taken care of. I would never hurt anybody. I want everybody to be happy, make money, and enjoy themselves. Sorry, Craig, go ahead, buddy.
That's okay. I just posted your email address in there. So, yeah, I was just going to say that, if you like what Bubba just shared, okay, we've actually got the perfect thing too that will help you scale that. Okay. I've been working with automated systems for a few years now. And what I've personally found with automated trading is that, optimizing an automated strategy for different market environments can be a challenge. Okay. Getting real-time results to match back-tested results can be a challenge. And then leaning on just one automated strategy can also be a challenge. All right. So all of these things are real challenges when it comes to automated trading. So what we've got is this thing called Robot Lab. It allows you to take everything you have here, everything that you've seen from Bubba, everything that he's talked about, and scale it. Okay. And it's not just with me. but with the guy that is the architect behind Robot Lab. His name is Christian. You're going to absolutely love this guy. In fact, our families have gotten together on weekends several times. The kids have played together. Last summer, his family came up. They stayed the entire weekend here. We spent Friday night, Saturday all day, and Sunday all day on the water and on our boat, and just had a relaxing, great time together. It's always a great time. I'm going off on a tangent now. So about this coming Wednesday. Okay, let me just give you a sneak peek of what we're going to, what you're going to see. It's going to be about a 90-minute presentation, and here's what we're going to talk about. And by the way, you're also going to get another robot if you want one, just for coming. Okay, so here's what you're going to learn. We're going to talk about backwardation and what it even means. So this way, you'll know what to expect from an automated trading system. And so this way, you can develop trust in a system. That's so important if you're going to continue trading it for the long term, right? We'll also show you how you can slash risk, okay? Like Bubba was mentioning earlier, risk is a huge issue. And for myself, and in speaking with other traders, drawdowns are a huge issue, okay? Especially if you have a smaller account, all right? We'll show you how to create a portfolio of bots that minimize drawdowns and maximizes profits, okay? Christian is also going to discuss with you the #1 automated day trading system mistake that traders make, and he'll show you how to avoid it. This is something that I've had to learn the hard way. And finally, okay, we'll show you a 0 to full-time income trading action plan. So you'll learn a step-by-step plan for scaling your portfolio of bots as you build, your account over time. And of course, at the end of the webinar, we'll save you some time for Q&A. And I'll be there. So either Christian and I can get your questions answered. All right. I don't want to bore with all the details here. Okay. But just for joining us this coming Wednesday, guys, you'll get a free robot. Okay. So, come and spend some time with us. And we'll see you there. Again, this live masterclass is going to be on May 11th at 4:15. Okay. If you're on the fence, all right, I'll be honest with you. At first, I was skeptical about automated trading systems because I'm a discretionary trader myself. But then I started trading a few robots in another live account. And I started to see results, positive results that for the most part actually matched back-tested results. So now I've got a handful of bots, and I noticed that there's some of you guys in here that actually are in our robot lab, and that there's a few guys in here I noticed that we'll get together on a couple days a week and go through things, back testing and optimization and whatnot. But I've got and you guys have seen it. I've got a handful of bots that I turn on every morning. I'll check on those throughout the day. It's not that I have to, just me. I'm sitting here trading anyways and doing other things for Ninjacators. So I'll check on them throughout the day, and then I'll check them out at the end of the trading day just to make sure they're flat. And and for the most part, they do what they're supposed to do. I like to say that they're actually my employees. Not every day is a winner, okay? But overall, my portfolio is making money. Okay, it's another stream of income, and I can show you that if you want to see it. Let me know. But if there's anybody in here that wants, another stream of income that takes just a few minutes a day, if you do and or just want to learn more, join us this coming Wednesday on May 11th at 4:15. Okay. Let me go forward to the next slide. Again, you'll get a free gift just for attending. And in addition to next week's masterclass, okay, what we'd like to do, if you haven't done so already, and I know some of you guys have this, we educators, we wanted to offer you guys access to our Indicator of the Month Club. It's a great way to check out the quality indicators, and it's free and provides you access to more tools. Okay, let me post the link in here so you guys can register for the live masterclass. Let me get that here. Okay, sure thing. Let me get the links posted in here. And okay, that didn't go through.
Yeah, I got it.
Did it?
Yeah, HTV and Ninjacators Robot Lab link. I see it.
Okay. I don't think the link works, though, does it?
I don't know that I can't.
Yeah, it's working.
It works
Okay,
perfect.
good.
Perfect.
All right, and then here is the indicator of the month club link. Okay, let me know if you have issues with those links, but they should work. Okay. So yeah, I mean, that's pretty much it. I hope to see you guys on Wednesday. Greg would like to see the bots. Okay, let me share them. All right, hold on a second. I logged into the VPS when Bubba, when you were showing your track record, I went ahead and logged into my VPS because I've got it all set up on a VPS.
Okay.
Because I'll day trade from my desktop right here, that you're seeing right now. And I set up a VPS just for the bots because they're off trading on their own. And so here you go. Here is let me get this over here. So here's the VPS. Okay, see, it's a real remote desktop connection up there. And here's the trade performance. Okay, what I've done, this is just actually, this is 3 bots. Okay, I'm still testing. I've got a small account. Okay, you can see it right here. It's my dad's, mine and my dad's. Okay, with NinjaTrader. And I'm running these 3 bots: Chaos Theory, Standard Chaser, and Low Volatility Rider. 2 of them are on the mini S&P, and we got 1 on the NASDAQ. I'm trading the micros. It's a small account. Okay, this is the performance since March 14th to today. Okay, you can see that it's a total net profit. It has made a total net profit of 2,700. And I know that, it's like, that might not seem like a lot of money, but think about it. That's $1,500 a month. Okay, and right now, these things are killing it in this volatility. And they'll still do well in the long term. We've got back test results that go back 10, 14 years. Okay, so I can get you more. You'll learn more information on Wednesday, but I wanted to share this with you guys so you guys can see the results. And be honest with you, again, I was skeptical at first about these automated trading systems, but we've got Robot Lab. We've got some systems, and like I said, you can scale this with what you're doing with Day Trader's Dream. And let CTG create a stream of income for you, right? And then now you can let you can set up a VPS, let these robots also create another stream of income for you. And you can see the results. I mean, these are real-time results in the account. And this is just over a month and a half. So it averages the long-term results of these 3 bots trading 1 micro is like $800 a month. Okay, there's some months where I may lose $300, and then 1 month where it makes $1,500, that kind of thing. So, and look at the drawdowns. This is what I love is minimal drawdowns. Okay, look at your average win to your average losing trade. Okay, you're almost about one and 3/4. Okay, but look at your largest win. If you let the key is, oh, and by the way, you know what? These are my results because I've stepped in and managed the trade. If you actually let the bots on a couple days, probably about 7 or 8 days out of the month, out of this entire period, I stepped in and was like, oh, I'm up $600-700 today. I'm going to go ahead and close it. On some of those days, honestly, if I had let it go into the close, I would have been up $1,200 on the day. So this is real-time live account results for this short period of time. And even in the long run, like I said, the back test of this whole portfolio does about $800 a month. I mean, you're literally it takes a few minutes. You turn it on and then turn it off. You don't have to sit there in front of a computer. What is your account size that made the $1,500 a month? Right now, I've got 15K in there. Okay, look, I'll show you. Right there, just a little over 15K, but I started with less than that. So, yeah, so it doesn't, you can do this. Like I got a buddy of mine, He's going to set up. I talked to him the other day, and he's actually he set up. He opened up an account in NinjaTrader. He's signed up for the VPS. I haven't gotten back with him. I'm going to do that today. We're going to get back in touch with each other today, and I'm going to get him set up and running this next week for him. So he's just going to fund a $5,000 account. We may just do 2 bots. I'll probably just do the NASDAQ. Probably just do Straight No Chaser and Chaos Theory. This one's very active, almost a trade a day. And this one, you just get a handful of trades. I mean, you can see them. I'll have to enable them to turn them on. You can see them if I enable them. You can see the past trades. And that's what I like about this too. You can kind of see the past trades in here to see what they did. In fact, the other day on Fed Day, I was actually down a little bit on Fed Day because 2 fired off and lost money. But this fired off after the Fed announcement right in here. See my cursor, and ended up, I ended up like $100 on the day. Okay, on the regular E-minis, that's $1,000 a day. But I'm just doing 1 contract on the micro, so it's still, what I know, $500 to $1,000 isn't a whole lot of money for a month, but if that's extra income, think about it. That could pay a car payment, that could pay mortgage. So yeah, you could start with as little as 5. Yeah, and just we have a portfolio of several bots. I'm not going to get into details here because that's what Christian's going to talk about. But we have more bots than this. I'm just running literally a small percentage of the number of bots that we have. We've got some that trade gold, crude, euro, the futures euro contract, the E-mini S&P, the NASDAQ. It's mostly E-mini S&P and NASDAQ, though we've just recently added some additional bots now that trade gold and crude and the 6C, the euro futures contract. So I wasn't planning on showing this, but I saw, the results that the track record that Bubba showed. I'm like, you know what? That's a good idea. I need to show you guys that so you guys can see. So you guys can definitely see it. All right. So with that said, Bubba, let me give it back to you.
Yeah, I'll take it back. And in the meantime, I think I got it back now. Okay, I hope.
Here, I'll stop sharing.
And then, yeah, that's a good idea. Okay.
There you go.
And let me see here. Where am I at here? Okay. Show my own screen. I think I'm on your computer. What do I do here? This is why I hate making this show. Maybe I'm not. I know I'm starting to. There we go. Okay. So in the meantime, again, I got some questions that I'll answer every one of them. Hold on. Let me go back to the beginning. Where they started. Okay. Is the CTG program an automated system? There is no human discretion. Every trade is as a mathematical exit point or a stop point, and we take in big moves in our favor. We take partial profits and continue to let it run, and that is all predetermined by the algorithm. Okay, so there is no human intervention here. We don't believe in it. I don't believe in anything. So I want you to be, know that it's going to be purely mechanical, because you don't have to have anybody. There's no human emotion, because I believe that that's the biggest downfall. Okay, for most. And again, I said anybody who had trouble, just email me. I promise I'll get you the link. And let me see here. Is this correct? Set up a CTG account, subscribe to Day Trader's Dream, and then the trades are on it. Yes. Okay. Once you sign up and get your account open, you are good. And your membership actually doesn't click in until you get opened. If you open, in the next couple of days and get ready, then, but of course, if you just buy it and don't open for 6 months, well, then it's going to revert to when you signed up. But again, those who are, sometimes it takes a day or 2 or 3 for you to get everything done, because Nell Sloan will call you directly once we have everything set up, and she'll call you and open the account with you. Okay. So yes, that is correct. How does one get, let's see here. Is the CT program an automated system? No, okay, no discretion, correct. Can we use multiple bots? That's for Craig, but they'll answer that on Wednesday. Let's see here. do you need, I'm just going through, can I get more than one account? You can have more than one account, but of course you could add to one too. But I think what the question really meant was, if I wanted to trade like an IRA and a regular account, could I do that? And yes, there is no charge for that. You get two accounts for free. Okay, you can use two different accounts. You know, some people like to do both. You know, interest rates. You know, I mean IRA and regular. Okay. Let's see here. Does CTG take IRA funding without going through? No, they have to go through a custodian. That's a law. It's not their decision. It's a once-a-year fee. It's minimal, but it is a fee. You know, it's probably similar to what you're paying now. They go through, most of it goes through Midland. Okay, but there has to be a custodian. Okay, otherwise you can't do it. IRA, again, IRA rules are very strict. Okay, you have to be ready for that. And can you use a fund? You can use a funded account, sure. Okay, you can, again, as long as you get the fund, as long as they have access to the fund, so you can, you know, join in. Yes, you can do what you want. Okay. I never trade futures forward. Do guys help? Again, they help you. They walk you through the setup of an account. Okay, they're very friendly. They answer the phone, believe it or not, when you call. Okay, so there is no, you know, they don't hide behind voicemail. That's one of the things I always hated. I could tell you stories, which I won't today because it's getting late, but someday I'll tell the stories of some of the disasters because of what they are trying to get through to some of these people when you need them. Okay. If an automated system, what is the $99 a month is my fee for giving you the algorithm. Okay. Giving it to CTG. Okay. You know, that's what the $99 a month is for. If you want to be a member, there's a membership fee. Okay. If you're a member of a golf course, you still pay for golf carts and lunch and whatever. Well, I'm the golf cart and the lunch. Okay. Without me, there's no signal. Okay. Where am I here? Does the algo at CTG change according to the it trades the trend of any given time? For example, yesterday, we didn't have a trade yesterday, I believe. Okay. There were a couple of times, you know, the markets have been, from a standpoint of very challenging to trade, you know, when you're trying to pick the trend. Now, you know, when the algorithm is looking for the trend, it's got to have enough confirming factors to establish that it is a trend. And, you know, the congestion model we've been in, I mean, if you look at the chart itself, okay, and you look at the overall trading action, okay, so if you're looking at this on an hourly basis, okay, which is what we're using, you know, look at the hours. Hold on, let me just refresh this so it'll even look a little better. There you go. Look at the chop back and forth. Again, you don't want to be involved in that kind of trade. You want it to be a confirmed breakout trend in your favor. Okay, we had a trade the other day. We had a nice day going. It might have been Fed day. I don't remember, but we were long the Nasdaq as it was going up. Okay, I'm sorry, short. It was Thursday. We were short, and then but late in the day we got a big rally in the Russell, which took us out of the Russell at a loss. We made money net, but it was it took a big day into a small day because of course we had that huge rally late in the day. Okay, so again, it's trying to make sure that those things don't happen. Obviously, nobody can ever guarantee that is not going to happen. We have no control over that part, but we can identify the trend, which we do. And when we get a nice long running trend, you get some very big juicy days. But again, our first job is to play defense and make sure that we stay in business. Our second job is to make lots of money, but we have to first make sure that when things aren't right, we're defending, which is why we set stops and and everything is based on, again, a mathematical formula based on the algorithm that does everything automatically and sets up the trigger points right away. Okay, because we want to make sure that not only we have the ability to make money, but we lose the minimum when we do lose. Okay. Let's see, the algo straight up 1 hour. 1 hour chart is what we use. Yes. Okay. We use 1 hour because we wanted to be more conservative. We want to grow these accounts over time. Again, using the models that allow you to, because one of the beautiful things you can always do is as you make more money, and I will teach this, and when I start teaching to the Day Trader's Dream as well, is when is the right time to press your account, and that'll always be based on the amount of money you have in your account, and B, where we are with the equity curve, because there are certain times that are advantageous based on the equity curve to add. Okay. So, platform, you don't need a platform with the auto trading, but you have access to the CTG has a white label platform which has price ladders and like many of the others. Okay, they also accept some of the, you can use the Ninja signals there as well. Okay, they can convert some of the Ninja signals into their stuff. So again, it's a very good solid account. And again, I'm not going to make any comment to how much you can make. Okay. And I'm not, so I can't answer, can you make 5% a month? Is it possible? Yes. Am I going to give it to you? No. Again, I don't make future promises. I showed you every result I have from real live trading since people could participate in it. And there's many people that are listening today that are here that can vouch for what I'm telling you. But again, the results are also audited. Okay. And I don't want to tell you what you can do in the future. I showed you that. And when I told you about the BS in this industry, I don't want to make you promises that I can't keep. Okay. I have no idea what the market's going to do. Okay. I have no idea what it's going to do in the next 3 days. I have an opinion of what it'll do, but I don't know how it's going to get there. So for me to make you promises would be a fool's game. And I'd be trying to sell you on something that you're not sure of. And I'd rather you be happy and come in and understand everything that we do, instead of me making you some ridiculous promise I could never keep. Okay. What is expected dollar value drawdown expected? Wait, I showed you the exact numbers. I don't know. Again, I don't have any expectations. I can only do exactly what they are. And we showed, I forget the numbers exactly, but I can flip something, go back to it. The biggest thing, the worst drawdown in the aggressive was 2,500, and the worst day in the standard was 800. Okay, that's the best. That's the worst day they had. Okay, again, we're very transparent with what we do. Okay, that's what we try to do. We're very, very transparent. 30,000. You can go bigger if you can. Let's go put 300 in if you want. Okay, and trade 10 times the size. I have a few accounts that do that. Okay, my only recommendation to everybody is it's always better if you start smaller. Think of it this way. Okay, I am right at what I teach, but let's say you're not sure. Okay, isn't it better to start small and be pissed off that you didn't start bigger? Okay, but learn and get comfortable so that you understand how the markets move and you can see the reactions of certain things so that you know how you're going to react and grow quietly and organically. You know, this isn't going to work just today or tomorrow. This is going to work forever. Okay, so isn't it better to start smaller and grow your way in? Because I'm telling you, the emotional side of the trade is very big too. Okay, I want you to be comfortable in understanding. This is the whole thing. Look, I could tell you anything, but I want you to be comfortable. That's what it comes down to. Okay, and you have to see things work yourself before you can understand how big you can trade and how comfortable you are with it. Okay. So yes, we're averaging over in the aggressive. We're averaging well over $1,500 a month, but I don't want to promise you that. I don't know that's going to be the case for the next 5 months. Again, I don't want you to be, I want your expectations to be that we're running a model that works over time, and will go through drawdowns like everything else, but it will end up making you money. And at what percentage? It really depends on what the markets do. You know, the price action inside the markets is as important as the model that you're using. Okay. If you get stuck in consolidation, it's a lot harder to make money in tight markets. Okay. Yeah. So again, be prepared for everything. And that's why I always want you to be prepared. Okay. I'm a big fan of giving you full disclosure up front so that you know what to expect. Okay.
Yeah. Hey,
yes, sir.
Bubba, I noticed the same thing here, like with the bots that I had running in my live account. April was kind of choppy, and it literally made all those gains in the last couple of days of the month. It was crazy.
Exactly. I mean, again, both of us are trying to educate you for what the unexpected. That's why we don't make ridiculous promises. There is no coupon code. If you go to the link I gave you, Okay, it will go right there. And again, if you have a problem with that, just please email me at bob@bubbatrain.com. I said anybody who emails me before I get off will have the access. I will guarantee you a spot at the rate we're at, and I will guarantee you entry. Okay, again, listen, I'm the boss. I'm, as they say, I'm the man. I'm the janitor. I clean the toilets, and I trade the product. Okay, so I do everything in between there as well. Okay, it is recorded to be sent out. What are you asking? You of all people, I don't say a word unless it's recorded. Okay, I don't say a word unless it's recorded. Okay. Anyways, Craig, I think I got them all. If you have more, you can email me directly. I'm the chief cook, and I'm the bottle. I do everything. Okay, you know, I once hired a guy who said that what I was doing was below him. I fired him, okay, because I did it every day. Okay, so in the meantime, look, have a great day, everybody. Have a great weekend. Enjoy the Kentucky Derby, and if you care who I like a post that hasn't won since 1985. Mo Donegal, the one horse. In the meantime, Craig, thanks, buddy. It was great to be with you again. I appreciate it. I'm looking forward to the lab myself. So to all of you, have a wonderful weekend and enjoy yourself. If you're you got basketball, hockey, baseball, horse racing. What could be better? Have a great day, everybody. Thanks, and I'll send this recording out shortly.
Thanks, Bubba.
Thanks, Craig.
We'll see you guys.